Let's bring in two VC legends, Roger McNamee, he's the co-founder of Elevation Partners and an early Facebook investor, and Bill Tai, co-founder and chairman of Treasure Data. Bill was also the first seed backer to commit to funding Zoom, which overall has done quite well, though it has been a pandemic sufferer thus far. Guys, here you are. Thanks for joining us this evening. Bill, I want to start with you because we just had a couple of very skeptical folks on valuation say stay away from anything that's not profitable, but everything that's worth buying pretty much is unprofitable at some point. So how do you sift through as an investor at this time and figure out what's worth it?
You know, I think the comment about focusing on companies with profitability does matter. I think we're in a period where, as I think your last guest pointed out, we have, I think, a multivariate equation where you have rising rates affecting the multiple, which is the amplifier on the baseline, which is earnings. A lot of the companies coming into this recent period had no earnings. There are a few that do, but they are all getting treated equally badly. I think all of the high flyers are down anywhere from 50 to 80%, including companies like Zoom. And you probably saw from their numbers yesterday, they are more than just profitable. You know, that's a company that had $500 million of free cash flow on just over $1 billion of earnings, 37% operating margins. I mean, Microsoft has 34% operating margins. So, Zoom is in a special class that continue to grow. So I think, sift through all that rubble and find the couple of gems and, pick those days where the market is selling off hard. Load your boat and just kind of wait and see what happens. Okay.
Now, Roger, it's good to see you. You've been trying to be sober about this market for a long time. And so that's why I want to come to you this way. When the market's riding high and things are going up and up and up, people are all like, oh, well, buy everything, buy based on growth. But then when things are tanking like they are today, you get a bunch of people saying, oh, only buy the stuff that's profitable, which means you wouldn't buy half of the IPOs, right? Ever, but now they're trading at pre-IPO level prices. So tell me what you think the most important narrative is for the tech markets right now. What's happening and how should investors use that perspective to decide what to buy and what to sell?
So, John, I think that we have to approach the current environment as a real bear market, possibly a generational bear market. So it's entirely possible that we're nowhere near the bottom. Maybe we are at the bottom, but it's more likely that we have a long way to go. In that context, the only thing that investors should focus on now is what is the portfolio I want to own when the next bull market begins. Now, the point about owning things that are profitable, in this context, it's because the market has allowed a lot of really silly business models to come public, ones that really are probably never going to be profitable.
For instance?
And so profits are, well, I think the ride-sharing companies would be an example. I think a lot of the fintech companies are examples. There are so many on the list. If you look at the stocks that have come down the most, there are many of them with very suspicious business models. I mean, Upstart, which is down like, 90%, that business model is completely unproven. It may vaporize for all we know. Peloton, so many of those bikes were sold on a buy now, pay later model that we're not entirely sure how many of them are going to come back. Right. And so you've got to see issues like that are out there for companies. But on the other side, you have exactly what Bill described with Zoom or with DocuSign. These are profitable companies. I think at some point you want to own things like that. But I do think it's okay to be looking at the things that are unprofitable.
Okay. So I want to get another round of questions into you guys. Then, Bill, we've talked about what some of the silly business models might be. What are the really prescient business models that have come forth in the past 5 years, the most important technologies that we've seen, whether it has to do with AI and big data, whether it has to do with something else that investors should say, well, in that next bull market, this company's got key technology I want to own?
I think that is a great way to look at it, above and beyond just profitability, because I agree with Roger. You want to be very careful and stay away from the, quote, suspicious business models. But there are going to be a couple of areas where there are good companies that are forward investing in growth, so are not yet profitable, but are in the right area. In the last big tech down cycle, one of those great example of that would have been something like an Amazon that didn't have profits for many years, or a Netflix, for example. And I think the tides are shifting now towards, obviously some of the SaaS models like the DocuSigns and Zooms, and then the companies that support those kinds of companies, like the DevOps companies, like, say like a Datadog.
Right.
Datadog, some of the extraordinary high flyers are also smashed down. They are not profitable, but they are in the right place for kind of a 5-year time horizon.
Yeah, the bargain bin overflows. Unfortunately, we've got to leave it there. Bill, Roger, thank you. Bill Tai and Roger McNamee.